What's up, guys? There's a lot to talk about in this one, so forgive me if it's a bit longer than the previous videos. Let's jump right into it. I was mentioning in the last video how ever since February, where Opex was in the middle of the cycle, Opex has slowly been moving towards the end of the cycle. So we saw here in May where it was in the middle, we saw here in August where it was towards the end, and here in November where the actual T+2 date was right after the cycle, but there was pre-hedging on the 2 days before, and all those are in pink bars. So let's look back at our March-April cycle. We had 40 trading days till price found the bottom, and then what I view it as every just around 40 trading days, the price starts to naturally go back up as the price has found a bottom. And so we had this, what I would call natural price increase leading into Opex. And we had the same thing here after 39 trading days, a natural price increase leading into Opex. And over here was 37 trading days, natural price increase leading into Opex. And 41 trading days found our bottom on January 24th and began a slow climb leading into Opex. And I mentioned in my previous video that this is the first time we are going to see Opex come after an already established uptrend for a long period of time. So what I mean here is this was Opex, and then there was continued price improvements. Here was Opex, continued price improvements. Here was Opex, continued price improvements, and then November was where what stuck out to me. So if you notice again, after every Opex, price continued to increase afterwards. We had it in February, we had it in May leading into June, we had it towards the end of August, and November we had 2 days of pre-hedging for Opex, and then price went down. Now that stuck out to me as strange because where was the continued price improvements after the Opex in November? So after doing a lot of talking to various DD authors this weekend and speaking to a lot of brilliant minds in our community, I think I've come up with something that makes the most sense and can give us a very big clue on what we might be looking at over the next 2 weeks. So I'll bring you guys over to a new chart. This is a chart of the deep out the money puts. Credit to Arika, his name is. I'll link it in the comments. He showed me this, and what this leads me to believe is that Opex is not the single factor that is pushing price movements. And I know a lot of people are going to disagree with me on this, but just hear me out. And I'm also going to link a DD by Bob Smith, who wrote all about Doom, so deep out of the money puts. So let's get into it. On April 16th, we had 386,699 deep out the money puts expire, and 27 trading days, which coincidentally landed on the exact same day as Opex, was May 25th. And as you can see, pretty significant price increase that was followed with continuous price improvements. Let's move over to July 16th. 419,660 deep out the money puts expired. 27 trading days later, we had a big green bar, which coincidentally once more was on the exact same day as Opex. Moving over to the 15th of October, now this is the outlier. We had only 47,796 deep out the money puts expire, and let's look 26 trading days later, we had this green bar, but it wasn't followed by continuous price improvements. So let's recap. Opex on May 25th was followed by more price improvements. Opex on August 24th was followed by more price improvements, while November, Opex was not followed by more price improvements. And my question was obviously why? And what I'm looking at, I believe, tells me the answer, that it is not only Opex that is pushing up the price of the stock. It also has to do with the deep out the money puts that expire and are due just about 27 trading days later. And if you want to learn more about that, you could read the Bob Smith DD that I'm going to link in the comments. Now, let's look at our cycle. So we had on the 21st of January, 284,728 deep out the money puts expire. And so 26 trading days later comes out on March 1st. or before the morning of March 2nd. And what you'll notice about this cycle that's different than every other cycle is that Opex, which T+2 would come out anywhere between the 22nd, 23rd, and the 24th of February, is not on the same day that the deep out the money puts would be due. So on this cycle, they landed on the same day. On this cycle, they landed on the same day. And on this cycle, they landed on the same day. And this cycle had the weakest amount of deep out the money puts, which coincidentally is the same cycle, is the only cycle that we didn't see continued price increases after Opex. And so what I'm thinking here is the reason utilization rate starts to increase at such a fast pace in this last cycle, and the reason they may have pushed us down, pushed the price of GME down the lowest this cycle, is because of what's coming, which is a sort of double whammy of February Opex combined with a large amount of deep out the money puts due. And if you believe they don't have an effect on the price, then simply explain why the cycles with large amount of deep out the money puts had continuous price improvements after Opex, while the cycle with the least amount of deep out the money puts had no price improvements after Opex. This is all besides the fact that the leaps options from January 21st, if institutions who owned deep in the money calls on January 21st had exercised those calls, those shares would also need to be due on March 1st as well. So I'm not trying to hype a new date. What I am saying is that this entire period from Tuesday, February 22nd, all the way through, I would say, the period of March 7th is what I believe has the greatest chance of taking us out of this upper line resistance. And this is the box where I believe will break out. So between February 22nd to March 7th. This is the box that I believe will have the greatest window of opportunity to break us out of these cycles. Now, just to point something out, if we take a look at the RSI in each of these runs, so you can see on the right hand of your screen, just about 70 to 75. Each run topped out right around here. So labeled them in green, and the blue horizontal line is where they just about top out. And you could see that our run, where the RSI is about 50, we still have plenty of room to run. So that leaves me cautiously optimistic that there's still a lot more room for price increases over the next 2 weeks. Now, the levels that I'll be watching out for would be first level to break, just about the 127 area, second level 150, third level 171, fourth level 191, and this is the level where I think things start to move at a much faster pace. So I mentioned previously that 137, after that things will get spicy. What I meant was that this is pretty steady price increases, but I believe once we cross 137, price will start jumping a little faster than it has been the past 2 weeks, and I believe past 190 is when price will really start to move. And then just to finish off, so let's look where the boom hunter is holding. I believe that a cross of 190 will break us out of the boom hunter's resistance, which will most likely lead to a whole lot more price increase. And the QQE is the closest it has been in an entire year to flipping long on the weekly, except for this period in November, and I believe we are even closer now. Also breakout candles on the weekly, which, like I mentioned in previous videos, last time we saw that was all the way back in August of 2019, and that's when the price was 315. And except for this low right here, it's pretty much really steady price increase all the way up to January. So going forward, I believe that dooms do absolutely play a really important role in price increases, and my evidence would be that the November cycle with the least amount of deep out the money puts expiring had no price increases after Opex, while the cycles with many deep out the money puts expiring had significant price increases even after the Opex trading days, and this is the first cycle where Opex and the date that the deep out the money puts are due do not line up in the same date, which opens up a 2-week window where I believe they're most exposed, thereby being the reason they started to directly short the stock in this previous 40-day downtrend, and B, why out of all the cycles they brought the price this low. And like I've mentioned before, I don't necessarily believe these were cycles as opposed to a continuous walk down of the price ever since just about March, June, all the way till where we are today. And the consequences of walking down the price were 20-day spikes in the price due to the methods that they were shorting. So walk down of the price, this was a consequence. Walk down the price even more, this was something they couldn't avoid. Walk down the price even more, and that was another consequence. And I believe that this was the absolute bottom, and this is where the cycles end. This is where I believe the cycles are over, and I believe that from now until any time in the future, this stock is now only bullish per what I can see. And I believe that as soon as we break out of this is when things will really start to heat up, and I'll be updating as we go along from here.